Hello, Miss Golden Girl here. Ooh, it's getting closer and closer to time for me to go to South Dakota for my work assignment. Yes, this is my contract. This is the contract that I signed on October 23rd, 2023. And today, yes, yesterday, I completed online my onboarding process for Regency Hotel Management. That's the company I'll be working for. I'll be working at Custer State Park Resort in South Dakota, Custer, South Dakota. So I'm bringing you along. The title of this video is the tax implication, tax consequences, tax ramification of earning additional income. So I'm just sharing with you my story and how I prepare to earn this additional income. I want to know up front what my tax consequences are going to be, how this will affect my tax liabilities so I can withhold throughout the year. So I'm going to share how I prepared this. I'm not giving you any tax advice. I am a retired accountant. I have prepared taxes in the past, but this is just my story. Okay? I want to emphasize that I hadn't had any additional income earned income since 2017. And my last working vacation was 2015. So some things have changed since then. So stay tuned. I'm going to share something else with you. Okay. You see this form W-4, and that's employee withholding certificate, and then a W-9. I have been waiting because I have a contract, and to see would I be completing a W-4 or a W-9. And this would determine whether I would use a Schedule A for employee expenses such as my travel, cost to get to the job site, or would I use a Schedule C? The W-4 would dictate that I use a Schedule A for employee expenses such as travel, food, hotel costs. Now, these are expenses that I would claim if I'm not reimbursed by my employer. A W-9 would make me a statutory employee, and I could claim them on a Schedule C. Now, the problem is with the change in the tax law, which is just temporarily from 2018 to 2025, are these temporarily tax laws that was passed back in 2017. Now, what's going to happen is whoever political party in office somebody's going to get blamed when they're rolled back. And they were just temporarily, and most taxpayers don't know they were just temporarily, just just to make one political party look good for the time being. So okay, so I found out today that in doing my onboarding that I completed a W-4. So that means that my employee expenses will have to go on a Schedule A itemization. But with the new tax law, they increased the standard deduction and took those items off the Schedule A form. So I no longer can claim them if I would choose to itemize. So I'm a little bit disappointed, but I had already calculated withholding on all of my income. Now, what this is going to do for me, it makes more of my, see, that's a Schedule A, itemize. I'm going to move this down. I'm going to show you the Schedule C. And this is the Schedule C, profit or loss from business. So my employee expenses, I can't use them because I'm not considered a statutory employee, so I could put them on the Schedule C. I completed a W-4, so they would have to go on a Schedule A, and at this time, they don't allow you to claim employee expenses on the Schedule A. So I had to educate myself from the last time when I did a working vacation. All right, knowledge is key. I'm going to talk to you about Social Security worksheet next. Hold on. Okay. Now, here's the 1040 SR, which is for seniors. So what I'm doing already, this is March, I am calculating the tax implication, ramifications, consequences for this additional income that I'm going to earn in 2024. Now, the reason you see this as 2023 is because the forms for 2024 isn't out yet. They don't print those up till at the end of the year. So I'm working off of 2023 information. I know, the standard deduction for 2024 because that's been published. But when I look at the tax table to estimate my tax liability, I am using the 2023 tax table, which is close enough. It's close enough. All right. So now here's the big kicker, the Social Security worksheet. And it's easy enough for me to figure out. I'm single. So the ceiling for me is the $25,000. Social Security for each taxpayer is different. It depends on your Social Security amount that you receive annually and any other additional income. So the maximum that amount of your Social Security benefit that can be taxed is 85%. And it could be 0% tax to a maximum of 85%. And with that ceiling at $25,000, a lot more people, taxpayers, are paying taxes on their Social Security than when this was first implemented. Social Security wasn't always taxed by the federal government. This took place around in the 80s, 1983, I think it was, but the early 1980s. At that time, it was maybe passed as maybe a temporary solution, and it's still here. And they have not adjusted those ceilings. There's a law in committee now, but it'll probably never come to the floor for a vote. They'll probably introduce it every year so that particular legislator can seem like they're doing something for the constituent. But what it needs to do is to come to the floor for a vote. So, pretty much with this additional income, my Social Security is going to be taxed at 85%. 85% of my Social Security is taxable. But that's okay. The tax consequences, ramifications, and implications. But I know them. Knowledge is key. So I did a budget for my income that I'm going to earn. Okay. So let me try to summarize this. I cannot claim my employee expenses for traveling to the job, housing, meals, because I'm not classified as not a statutory employee, so I could use Schedule C. I would have to claim them on Schedule A itemization, and right now they have removed that item from Schedule A itemization. So that's a tax write-off that I won't be able to claim. All right then, knowledge is key. Again, I'm just sharing with you how I am preparing for my working vacation, my work assignment with Regency Hotel Management at Custer State Park Resort in South Dakota. Okay, this is my budget for my biweekly income at Custer State Park. I'm going to be getting paid $15 an hour. I'm going to work 6 days a week. I had a choice, 5 or 6 days a week. So I went on and I selected 6 days a week. Normally on my working vacations, I get a second job because I have a lot of time on my hands. And usually I go there to earn income and to work and to vacation. So this works out good. Uh, that extra day a week will give me 8 hours of overtime. So my bi-weekly will be 700. No, my per week. My per week. Well, I could go ahead and deal with the bi-weekly. The bi-weekly is $1,560. I deduct off the lodging and meals, and I will only be taxed on. I will not be taxed on the lodging and meals. I put in there unemployment, but I don't really know for sure if South Dakota deducts for that, but I put it in there because most states do. And then I got the sales tax, which that was in my contract, that because of the meals, that I have to pay a sales tax on that. So I've tweaked this somewhat. Um, the additional coming up what I need for my taxes. So I will have some additional tax withheld. I actually completed the W-4 for an additional $262 a pay period because I got to come up with my tax withholdings. And so I got to, the job is paying for the additional taxes that I will pay because of the additional income. I am using it to do a debt reduction on a credit card. And I'm actually going to use $400. I was able to file to have state income withheld for Georgia. So I don't have that added in there right now, but I did reduce the amount that I'll have for debt reduction for my Sapphire credit card because that'll go to pay for the state income taxes for Georgia. I will owe state income taxes on that additional income. And then bi-weekly, I'll have $400 that I'll utilize for working vacation. You can see one time I thought about using it for long-term care saving, but no. I can't go there. I need that money for work and vacation so I can cover all the activities that I want to do for the work and vacation while I'm there. So it's looking good. It's looking good. Looking good. Feeling good about it. And one thing I realized coming out of that biweekly amount, $400, I'm going to pay some on my credit card to cover the costs that I'm going to incur traveling there to the work site. And I'm going to do my dining out from that amount of money too. Now, what I'm going to be exploring is the park and the surrounding areas. And so it won't cost me a lot of money. I'm right there in the park. I will also take gas out of that. So do you follow me where I'm going with this? It clicked in my brain. My weekly allocation of $105 from my fixed income, that's going to free that up pretty much. So what I'm going to do is to apply that to debt reduction. So, hey, this is working out pretty good. I just figured that out or clicked in my brain when I was looking at it a little more this week. Oh, that $400 bi-weekly work and vacation allotment can cover some of and then what I'm doing, I'm going to see, since I pay $8 a day for meals, if I can exist off eating their food. If not, I got some money from the work and vacation allotment to buy me some food that I want. So you follow what I'm saying? That this working assignment is going to free up some of my monthly budget expenses. And I can use that money on debt reduction because my goal is to be debt free by December 31st, 2025, paying off my car and my credit cards so that I will be in a position with the credit cards, whatever I charge on them, that I will pay them off in the month's time. See, what I'll do, I'll let them actually, be reported, but I will pay it off to avoid paying any interest, because gotta keep the credit score up. So, you gotta utilize credit to keep a good credit score. Crazy, isn't it? But that's the way it works. All right, so I just want to avoid paying interest on those credit cards. Okay, then. Just sharing, my story, my journey. My goal is to save $50,000 in 8 years for my long-term care. A short-term goal is to save an emergency fund. I want a 3 months. And that should be good for me. I got fixed income, my pension, and my Social Security. So I think a 3 month emergency fund should be good for me. I'm saving this nest egg. And the nest egg is, I'm saving, I started, say, in 2023. I'm saving my annual cost of living $300 that we get every year on our pension. And I just want to see how that's going to add up. And so I just got that in a online high yield savings account. And just want to watch that grow. And this year, debt reduction. Got debt reduction in my budget. All right, you take care. Again, I found out with doing the onboarding process that I'm not a statutory employee, so I cannot claim on Schedule C the employee expenses. But it's okay. It's okay. All right. Until next time, I strive I expire to inspire before I expire. And I embrace my golden years by dialoguing about this season that I'm in. I've never walked this season before. It's all new to me. So it's interesting. I've been collecting my pension for 21 years. As of when March the 25th, when I get that check. But now it's like, okay, what happens after retirement? And I just want to show you, life still goes on after retirement. We work so hard for our pension, for retirement, but then we think that that's the end. But as long as we're here on earth, financially, we still got to stay on top of our game. My biggest concern is I don't want my money to run out before God gives me my heavenly wings. So, hey, I'm going back to work. All right, take care. Bye. Oh, I want to get always looking for the tax consequence, implication, and ramification. What do they say? What's certain in life? As long as you live, you got to pay taxes, right? Pretty much. So, yeah, I'm out here looking for some tax write-offs. So I'm still looking, but I cannot claim those employee expenses of my travel costs to the job, my housing, my meals. Okay. Bye. Be blessed.